The wealth management industry has grown significantly over the last many years, but the knowledge and learnings from the industry have not been passed on to the clients or the customers or even to you, our viewers. With the Investing Edge, it is our endeavor to bring this wealth of knowledge and share it with you. Hello and welcome. You're watching the Investing Edge. I'm Sumaira Abidi, and with me is Feroze Azeez, Deputy CEO of AnandRathi Financial Services. Feroze, thanks very much for joining in for yet another episode of the Investing Edge. The first question I want to ask you about is the debt space, because recently we've seen another real estate NBFC default, and with that, some of the affected mutual funds have had to side pocket their exposure in some of their funds. Is this side pocketing something that investors should be worried about?
No, I think side pocket is something to cheer about because it solves 2-3 problems. And I think as an industry, we are doing it too later in the day. Of course, 1 or 2 AMCs did it. So if you have money in debt funds, it is very critical for you to understand this concept. And it's a very simple concept. If you have 10 bonds in the debt fund, one of them goes default. Let's assume you have put 10%. आपने अपने 100 रुपए 10 लोगों में बांटे हुए हैं, 10-10 रुपए करके. एक फंड, एक बॉन्ड वो पेमेंट नहीं करता है, तो सेबी कहती है कि इसकी जो 10 रुपए की वैल्यू है, इसको आप 2.5 रुपए मानिए. आ जाएं पैसे तो ठीक है, but now what happens? He starts the mutual fund manager starts computing this at 2.5 rupees. So what happens? Now people start panicking, they take the money out, right? What will happen when people start taking money out? The guy who stays back is left with this more than what it was. पहले तो 10% बांटा था, इसमें से अगर कोई 50 रुपए निकाल ले, तो अब बचे कितने? 40 रुपए और 10 रुपए. Let's assume the fund manager sold 5 bonds and gave the money. Now the proportion of the defaulted bond is how much it has become? 50 में से 10 रुपए. कितने हो गए? 20% हो गया. So this was what was happening. So people who stayed back were losing. The people who actually went out took the cleaner portion and went out, which is unfair. Now let's assume, on the other hand, जो निकल गया ना, उसके लिए भी नुकसान हो सकता है. क्योंकि there is another company, another NBFC called DHFL. It had defaulted. तो सेबी ने कहा इसकी वैल्यू को घटा दो, पैसे आएंगे तब देखी जाएगी. So the guy who took away the money, he took away the lower value of it, but actually DHFL paid back, right? He actually paid back, तो उनको कम वैल्यू मिली. So either way, to make sure that everybody gets their fair share of loss or gain, side pocketing is a very good idea. Second is, it will make the fund more stable. Because if it is side pocketed, there is no hurry for anybody to remove the money, na? Because it is anyway side pocketed. So what will happen? There will be 2 NAVs. Achhi NAV or ye defaulted NAV. Right? So you will only be able to remove a portion of it. So side pocketing is something which is very good for investors because it does not give undue credit or debit to any customer in the fund. Second, it reduces the panic because there is no hurry to redeem because it's now been segregated. Now, one fund has transformed itself into 2 funds, right? And you can't redeem from this defaulted fund anyway because there's no money coming. So it's a very good thing. Now, third, the more important part is why are these defaults happening, right? Can this continue? How do I protect myself? Because debt is something which is bought for safety reasons. जिसको safety में सोच के गया था, उसी में risk आ गई. Right? So will this continue? And where is the carnage going to stop? And how do I protect myself? So if you have to protect yourself, you have to have a very well diversified debt portfolio. Now, for example, it is not the mistake of the fund manager. Please understand that if real estate is going to go through crisis, when you buy an apartment from a builder in Gurgaon and if he doesn't deliver, would you blame yourself saying that I didn't do so much analysis? May not be as much as you would blame the fund. So defaults will happen. Some defaults will impact you more, some will impact you less. How do you keep the impact lesser? Now, for example, if you had 8 funds, same as what I would have bought, you will have 170 companies you would have lent to. 170 लोगों को आपने पैसा दिया है, उसमें से 2 डूब भी जाए ना, आपकी रिटर्न में आधा % का फर्क पड़ने वाला है, राइट? और आपके ओवरऑल पोर्टफोलियो के 100 रुपए में से आई रेकमेंड ओनली 21 रुपीज इन डेट फंड्स। वो 21 रुपीज को आपने कितने लोगों में बांटा हुआ है? 170 लोगों में बांटा हुआ है। उसमें से एक डूब जाए तो योर रिटर्न ऑन योर 100 रुपीज विल गो डाउन बाय 0.1, 0.2, right? So diversification is the only solution for you to traverse this path of the debt crisis.
The other thing I want to talk about while we're on the subject of mutual funds is ETFs. So recently we've seen 4 new ETFs and new categories being announced, but they haven't gotten the reception that one would have imagined, for an ETF fund. Is that something that investors should actively consider? What role does an ETF have in a person's portfolio?
2 types of funds: actively managed funds and ETFs. The simple commonsensical difference between these two is one where there's a human being who's trying to better the market. In another, there is no human being. There is a human being, of course, named one, but his job is to not beat the market. His job is to keep you with the market, right? These, of course, come at a lower cost. In India, ETFs have some more time to claim fame, 5 more years. Because in an Indian inefficient market, because India is not as mature as the US market. So with brain and research, you can beat the market. That's the belief. And that has happened for the last 25 years. Last 2 years, जो इंसान मार्केट से बेहतर करने की कोशिश कर रहा था, वो मार्केट से खराब कर रहा है 2 साल से, 1.5 साल से. Does that mean that in the next 2 years will the trend not reverse? It will reverse. क्या हो गया है कि पूरे 5,000 शेयरों में सिर्फ 7-8 शेयर बहुत अच्छा करे हैं, right? Because it's a very polarized market. मतलब सिर्फ 8 शेयर अच्छा करेंगे तो फंड मैनेजर अच्छा नहीं कर पाएगा. So when the tide turns, these guys will come back with a reasonable bang. And if you see, history has 3 such instances: 2013, 2006, where fund managers were looking very dumb because they were not able to catch the market itself. So तब ETF की बातें ज़्यादा हुई थी, नए ETF आए थे, but tide turned. So we are 5 years ahead. After India becomes a very mature market, I think ETFs will be a better choice at that point in time. But you should not drop active managed funds today, looking at the last 1.5 years.
Okay, so ETF is a product whose time has perhaps not yet come in the Indian market. Okay, now that we've spoken plenty about mutual funds, I'm sure what everybody wants to know is how do they choose the basket of mutual funds into their portfolio? Surely you can't buy the universe.
In the last 17 years of my career, I went wrong several times and then realized that I have to cut the glamour quotient, okay, and filter to the core portion of the portfolio. When we do some shows, you see so many people calling in saying that I've bought a IT fund, pharma fund. But if banking is already 25% or 28% of most of the funds. If you bought 20% more of banking, then you have 50% in one sector, which moves far more than the market. Second thing is, when you're choosing from 457 funds, equity funds are 457. 143 human beings are wanting to do this job for you. How do you do this chunav? Of who are the 8 people who will help me manage my money? Will be on the basis of, we have put 3 formulas that has worked for us. One is called regression. It helps to check the signs rather than past performance. I ran a regression model way back in ABN AMRO. It threw up 6 variables which were common amongst all the funds which went bad before they went bad, right? So then you stop looking for which fund is going bad. The regression keeps looking for those signs. Second thing, you have to use the only theory of portfolio management which won a Nobel Prize, called Markowitz theory, which I use. You don't have to get into it at this point in time, but that's the second mathematics you can use to choose. The third level of mathematics you have to do is more commonsensical, not statistical. The best way to check whether the person is good is to check his or her work. What is the work of a fund manager? Take decisions. Can you find out all the 143 fund managers' last 100 decisions. Then you can check how many times he went right, how many times he went wrong. So we placed 14,300 decisions of 143 people. Whoever has taken more right decisions, let's assume one guy took 80 right decisions, 20 wrong decisions. Then you can say, okay, he deserves to carry a fund manager visiting card. When you check these 143, only 21 of them, in our opinion, qualify to carry the visiting card of a fund manager, because by design they're taking more right decisions. So these are the 3 steps if you followed, and if you kept following it and checking it, will you get the best schemes? The answer is no. If you bought 8 schemes, will your portfolio be in the top quartile? It will be in the top quartile, out of which you will still get some 2 dud funds. But then you need to analyze and find out whether you live with them or get out of them.
With that, we'll take a very quick break. On the other side, it will be time to open up the floor to our audience. Stay tuned. Welcome back. You're watching The Investing Edge. With me is Feroze Azeez, Deputy CEO of AnandRathi Financial Services. It's time now to open the floor to some questions from the audience. Yes, sir.
My question is specifically from corporate bond fund perspective. What exactly it is and what's its role during the retirement phase?
Corporate bond funds, as the name suggests, invests in corporates, different corporates' bonds. So there are different kinds of corporate bonds. The retirement, see, when you have a lot of money, it serves the purpose of consumption objective. There can be 2 objectives. First, you have to bifurcate your money into generational wealth and consumption wealth. If it is consumption wealth, you would want to not go through the cycles. You put it in a corporate bond fund and do something called a systematic withdrawal plan to give you a recurring every month inflow as against dividend. Then your tax liability comes down by 1/3. So corporate bond, the reason why I would use it is for a person who says, I have to consume this couple of crores in the next 4 years, 5 years, or even whatever be it is. And then you would put it into a corporate bond and do a systematic withdrawal plan. Because there is, in taxation now today, having a dividend reinvestment is not making sense. Because every year, last year growth made full sense in equity funds. Now dividend is making more sense because the tax laws are changing. If you put tax as an objective, then the advisor will give you, marry the taxation objective with changing dynamic taxation.
Mr. Aditya Bansal, you have a question on private trust?
The thing is, you recommend private trust, but we are going in the assumption. We are parting our money to a trust, and that money I cannot use actually. In case I want to use in future, God forbid, I need that money, I cannot use that money. And God knows, I don't know whether the government changes the policy on the trust also, whether the trust becomes taxable or not. I really doubt whether we really should go for that or not.
No, I wouldn't have, for the lack of time, I would have told you in a synopsis. So your understanding that you can't use the money is incorrect. Of course, you will use the money. That's the entire purpose. It's one person who gives the money to the trust. You can take the money anytime, but you have to be good to your wife so that she can give it back to you. So that's the key. See, you have to have beneficiaries whom you can rely upon during the rainy day. See, if there's a liability on me, this trust is not owned by me. I am only the manager of this trust. So point one, can I use the money? Of course I needed a few crores, I gave it to my wife, then she has to gift it back to me. Right? Second, when it comes to taxation, I have currently used the tax provision of gifting it under the zero gift tax limit of gift tax. So tomorrow, if they say trust is going to be taxed, it is always going to be prospective. If they say trust will have more surcharge, that day I will devolve my trust and pay the beneficiaries. But you can't say that 3 years back, whichever gift you gave is going to be taxed. That is retrospective tax. On saying then तो कुछ भी हो सकता है कि जो आपने last year tax भरा था 33 करके उसको आप 45 करके हिसाब करके बाकी pay कीजिए. That's what it means, ना? Do you understand? So capital receipt. So I have been a trustee on a few trusts of my clients for long periods. जो भी lawyer trust बनाता ना, उसका खुद का trust नहीं होता है. So they make a trust and then they're out. So I've lived with a trust. Okay, there are so many benefits. Now, for example, the file size is reasonable enough that income tax वाला एक query तो भेजता ही भेजता है मुझे, right? तो पहले तो जब मेरे नाम पे पूरे पैसे थे, तो पूरी किताब खुल जाती थी. Salary, कोई भी deposit. Now this is just an investment account. So there are so many merits of it. So there's a lot of deliberation we have done to come to this conclusion. Otherwise, I wouldn't have done it with my money. So you can't retrospectively tax a gift which was gifted at zero tax, right? So tax also has capital receipt and interest. Going forward, income will be taxed more possible, then I can devolve the trust. So we've gone through several iterations. And if you have children living abroad, like especially US citizens, there is so much merit of making it. People save crores on a $1 million trust.
Just a follow-up question on that. Is that like your liability, you are at least safe from that. What happens to the liabilities of the people who are the beneficiary of the trust?
That's why it's on my discretion. Na? If my wife has a liability, she will get zero from my trust.
Okay, the next question from Mr. Aditya Kishwar. Yes.
I have been very overweight on real estate in my portfolio. So my question is, would reverse mortgage make sense to add to the income stream if you are overweight on the real estate, especially when the real estate is not doing so well?
A reverse mortgage is a very, very popular concept globally. जहाँ आप एक घर में रहते हो, right? You have a house. You want to, because people there never used to have such large savings. So you've built a house. You want to live in the house. You can't sell the house for your retirement expenses. You mortgage that house. And the bank pays you money right away, but the house is in your custody. When the day you die, the bank takes over the house and sells it and gives the residual to your kids. So that a person at the age of 60 can enjoy the value of his house before he dies. That's called reverse mortgage. That's not doable in India, and you should not do it in India because the interest rates are high. Samjho, you have a 10 crore house, you're living in a house. In Mumbai, it's very, very usual, right? So what happens is, if the guy gives you the money, the banker says, okay, I'll take your house, but you can live in it till the time you're alive. He'll give you a value of 45 lakhs. Why? Because the interest rate is so high that you discount the value of the property. For 20 years, it practically becomes nothing. In the US, if you did the same thing, if you have a 10 crore or a 1.5 million, 10 crore rupees house in the US, he will discount it at 2%. So for a 10 crore house, if I get 6 crores, okay, I can write it off to him, yeah. But if I for a 10 crore house get 50 lakhs of the future, so that's why reverse mortgage is not popular in any country where there's high interest rate, because the concept itself doesn't work. So you should not do that. And I will not give away my rights of my house for 50 lakhs when I'll get rentals better than that if I lived somewhere.
Yeah, I had a question about your asset allocation. What's missing completely is the gold and the common investments that we do, diamonds, gold, silver, etc. So you have not given it any weightage at all.
So gold, because there are some things which are not assets. Gold is not an asset. It's a currency. Okay, if you went to the history of gold, it was always a currency. Because no asset delivers 25 years of negative return. Gold delivered 25 years of negative return in dollar terms. But in India, it is not visible. In India, it is wearing a wonderful jacket of rupee depreciation. Gold, India की asset नहीं है. Gold global asset है. You should check its dollar value. Can any asset give negative return for 25 years? I have not seen, other than gold. It's not an asset, it was a currency. In India, when you buy gold, you're not only buying gold, you're buying gold and dollars. When today you buy it at 38,000, okay, the value of gold in dollar terms is $1,500 an ounce, correct? Then you are in effect buying dollars and gold put together. Gold, I have had this debate with my mom. She said, 3,000 से 30,000 पहुंच गया तो gold की हमेशा बुराई करता रहता है. So उस 3 से 30 में गोल्ड का सिर्फ श्रेय जाता है 3 से 6,000 तक. 3 से 3,000 से 6,000 तक गया. That was the credit to be given to gold. The rest of it was all rupee depreciation. Now, how do you use it as a currency? One client said, and he insisted, saying that I like your strategy, but I don't want it in rupees. I want the entire currency to be in gold. So I report to him in per gram. And you can convert your entire portfolio. You can invest in whatever I said. You can invest in 39, 26, 21, and 14. And your entire portfolio is not in rupees. You can convert this into gold and invest. So gold is a currency. It's not an asset.
On that note, Feroze, thank you very much for joining in on the Investing Edge. With that, we come to an end of this week's episode, but do stay tuned. There's a lot more coming up on CNBC TV18.